In this video, I'll be talking about the differences between futures trading and spot trading in the crypto market. Now, these are two prevalent and common types of trading, and I'll provide you with a deep insight into their respective advantages and disadvantages. I will also help you to understand which of this type of trading method might be the best fit for your specific trading strategy and for your overall trading goals. So make sure you watch this video to the end so you don't miss any important information. So with that being said, let's get into the video. Now, let's start with explaining these two types of trading. Now, what is futures trading? Futures trading is a type of trading where you trade futures contracts at a predetermined price to make profit. Now, it basically means you're predicting the future price movement of futures contracts, and you can make money in both the upward and the downward directions of the market. Now, this type of trading enables you to hedge against potential price fluctuations, making it a popular choice among traders dealing with volatile markets. And because of this, you can make lots of money from futures trading. However, it's not all easy. The complexity of futures contract or futures trading and the potential for significant losses due to the market volatility can make futures trading a challenging endeavor, especially for those who are new to crypto trading. So before you get into it at all, ensure you dedicate time to learn it. Now, I have a full video on how to do futures trading on Binance and BYBIT. I'll put the links to these videos in the description below. Now, that's for futures trading. Now, what is spot trading? Spot trading involves the immediate buying and selling of cryptocurrencies with immediate delivery and payment. Now, the price you pay or you receive in this type of trading is known as the spot price, which is essentially the current market price. That is why it is known as spot trading, which means that you are trading at the spot immediately. That's the meaning. Now, spot trading is straightforward, less complicated, and generally carries less risk than futures trading, making it a more suitable option for those who are new to trading. However, it has its own disadvantages because if the price of the crypto goes down, you lose money. Now that you know what futures trading is and what spot trading is, now what are the differences between futures trading and spot trading? Now, the first difference is that for futures, when trading futures contracts, you do not own the cryptocurrency you are trading. While for spot trading, you buy and own the cryptocurrency you are trading. Now, like I said earlier, for futures trading, I said you are predicting the future movement of crypto to either go up or down. So you are not buying that crypto. You are only predicting whether it will go up or down. That's what you mean by whether you are longing or shorting. But for spot trading, you own the crypto. In spot trading, you will also have the crypto in your spot wallet on the crypto trading app that you are using. So that's the first difference. The second difference is that for futures trading, you make use of leverage, while for spot trading, you do not make use of leverage. Now, you know all these 10x, 20x, 30x, and so on that you are using during futures trading that helps you to make a lot of money in futures. There's nothing like that in spot trading. And this leverage of a thing has its own advantage and disadvantage in futures trading. So not to waste time in this video, I have a video dedicated to explain what leverage is and how to use it to make more money with futures trading. I'll put the link to that video in the description below. So that's the second difference. The third one is that for futures, you can long or short your trade. Now, to long your trade means that you are predicting that the price of the crypto will go up, and to short your trade means that you are predicting that the price of the crypto will go down. So this means that you can make money when the crypto goes up or when it goes down with futures trading, which is good. But for spot trading, you can only make money when the price of the crypto goes up. So that's the third difference. The fourth one is for futures trading, you have what is called liquidation price. And this is the price where you get liquidated. That is the price where you lose all your money. So for futures trading, you can basically lose all your money. Yes, all your money. But for spot trading, there's nothing like that. You don't get liquidated or lose all your money unless you sell a crypto in a loss. But you're still going to have something in your wallet. Now, the next difference is that for futures trading, you have what is called margin. And there are two types. We have cross margin and isolated margin. While for spot trading, there's nothing like that. I also have a full video dedicated to explaining the differences between cross margin and isolated margin. I'll also put the link to that video in the description below. Another difference is that for futures trading, there's a collateral you drop to take the trade. And if you lose the trade, you forfeit your collateral. Now, your collateral right here is the amount you are dropping from your own wallet to trade. While for spot trading, there's nothing like collateral. So these are the differences and everything you need to know about futures trading and spot trading. Now, in conclusion, both futures and spot trading come with their unique set of benefits and disadvantages. So your choice between these two will largely depend on your risk management, your risk tolerance, your trading goals, and your trading experience, and even your understanding of the crypto market. So it's crucial to weigh these factors and the differences carefully before deciding on which one suits your needs. And one more thing is that make sure you dedicate time to learn any one of this type of trading, whether you want to do spot or futures, especially futures, because futures is highly risky. So make sure you dedicate time to learn it before you even venture or put your money into it. So I hope this video has provided you with the necessary information you need to know the differences between futures trading and spot trading and to make an informed decision. Thank you for watching. I'll see you all in the next video. Bye.